Hi, I'm Hannah Fuller and I'm a real estate agent here in Far North Queensland. Today I'm here at Astute Financial and I'm going to talk to Phoebe. So much has changed recently in the lending world. There's a few things I think buyers really need to know about. So let's see what she's got to say. So Phoebe, what's different now that buyers need to be aware of before they apply for a home loan?
Okay, so there's quite a few things that have changed over the last, particularly probably 12 months to 2 years. And banks are really starting to look at people's actual living expenses. So what they spend on a day-to-day basis on things like, their utilities, their groceries, eating out and all that sort of stuff. So it used to be the case that people could just, write down a figure that they thought was approximately what they would spend per month, and the banks would use that in their application, pretty much no questions asked. So now what they're doing is looking through statements, so people's bank statements, just to see what people are actually spending, and they're using that in the applications. So these days most people tend to buy things on credit cards, debit cards, direct debit, all that sort of stuff. So it's pretty easy to see what people are actually spending their money on. And so they tally it all up, and that figure then goes into the bank serviceability calculators, which then affects the amount of money that you can borrow. So what banks are really looking at while they're looking at living expenses is people's account conduct. They want to be able to see that people can manage their accounts properly before they obviously get a mortgage. And so what they're looking for are things like overdrawings on accounts, late payments to credit cards and loans, over the limits on people's credit cards. So all of those things signal a big red flag to the banks when it comes to lending. So if you do happen to have maybe a direct debit that's been set up that's not quite in line with your pay, make sure you get it fixed up as soon as you notice it, because it can mean the difference between getting a loan or not.
Wow, that's a really good tip. So what about, it seems like they're looking at everything. What about things like Zip Pay and store cards, like with Amart or something like that?
Yeah, absolutely. So Zip Pay, Afterpay, Certegy, FlexiRent, Go cards, they're all considered debts by the banks. So when you have those limits are included in the serviceability and your affordability for the loan. So really the more that you have, generally the less your borrowing capacity is. And when we do a loan application, you will need to provide statements for all of those facilities. And we do find that quite often people are having to either reduce those facilities or cancel them off altogether in order to be able to afford property. And that's obviously depending on each individual's, overall position.
So if someone wanted to buy a house in the next 3 or 6 months, when would you suggest that they come and see you?
Really as soon as possible. So we can help people with things like account conduct. So if they've got a few things that haven't been matching up with direct debits, we can point this out and get it fixed up so that they're prepared in 3 or 6 months' time when they do eventually apply for a loan. We can also help with their living expenses. So if they are overspending a little bit, we've got these great budget tools that can bring them back into check, which in turn will then help them with their savings, which is really good. And the other thing is, if they come in and we can help them with all of this initially, then by the time they get a mortgage, they're going to be really used to managing their money, and which will definitely go a long way to reducing mortgage stress down the track.
So Phoebe, why would you say that someone should come and see a broker as opposed to just walking into the bank and having a chat with them, the bank that they bank with?
Lots of reasons, really. So not only do we help with getting their accounts in order and making sure that they're in the best financial position for when they do apply for a loan, we can also offer our customers choice. So we have over 25 lenders on our panel. So it's all about placing the customer with the lender that they best suit, whilst also getting them a really good deal at the same time. Quite often we see people that may go to their bank that they've been banking with for the last 10, 20 years, and they might be happy with their bank, but they might not meet that lender's particular policy. And so by coming to us, we can assess the deal based on all the banks that we have, so that we get it right the first time with where we're sending the application. The last things people want to be doing is submitting multiple home loan applications, because it can have a really negative effect on their credit file, because all of those hits tend to bring scores down, even if the applications were unsuccessful.
Thanks so much for chatting with me today, Phoebe. I really appreciate your time.
No problem at all.
And if you guys liked this video, please give us a thumbs up, as we would love to bring you a second video on topics like lenders' mortgage insurance, deposits, and what's happening with interest-only loans at the moment. But if you do have something you would like us to discuss next time, feel free to comment down below and we'll talk about it then.